How's it going, everyone? Welcome to another episode of Bitcoin Magazine Live. It is December 1st, 2022. Can't believe how fast the year has gone. I'm joined by my co-host, Nolan. How goes it, Nolan?
I love life, Chris. I love great life. And, amazing. What a crazy month that November was. Glad it's behind us. We're here in December. Brand new world. Maybe not as much lying or fake news or craziness, but I guess not. It's the same old story. So, everyone's talking about the SBF thing. And right off the bat, it looks like what we're seeing here is a very carefully managed communication strategy. We had the case yesterday of the Tiffany Fong, who we discussed. Good on her. She's been in the industry for a few months now. She was a big loser in Celsius and has had put really good content forward since then, sort of talking about scams and being victims. So SBF had an interview with her 2 days ago. Then yesterday, he went immediately to a New York Times interview. This was a speaking opportunity that he had already arranged before all the stuff, so they just kept it on schedule. And then this morning, George Stephanopoulos, so Bill Clinton's former chief of staff, if you didn't know. There was a lot of questions in the old days about whether he could be impartial after coming from the White House and going to the mainstream media. Maybe. And then he'll be speaking with Mario Nawfal this afternoon, another new person in the industry who, we got to hand it to him, has been really doing great stuff along this SBF story. He had Elon Musk drop into his spaces. Now he's going to have SBF drop in. So it looks like they're going with the same excuse each time. Oh, Wall Street bro, blew a tire. Whoops, yikes. Not really many people. George Stephanopoulos trying a bit this morning on Good Morning America to try and corner SBF on the question of using client funds. People repeat it, they mention it to him, but that's the distinction each time. He's mentioned about the using client funds, but they continue to just say improper risk management. What did you do? Oh, you blew a tire. Not much in there about the fraud that is using customer funds and the fiduciary responsibilities he had in his role. So it looks like we're seeing exactly what we sort of expected here, right? We expected that we would see a lot of spin involved in the aftermath of this. We're not really seeing the picture straight. We're seeing measured words. And if you'll notice, even his body language when he's doing this, not that we're going to be able to diagnose things with body language, but he doesn't look too convinced of what he's doing. He's sort of looking at the ground all the time. And people are pointing out, especially the George Stephanopoulos interview today, how much what we call skating, swimming, running around, beating around the bush was going on when he was bringing up those fiduciary things. But there you go.
Definitely. And it seems that the snake oil salesmen continue their tour. What do I mean by this? Kevin O'Leary and Bill Ackman both saying they believe SBF is telling the truth. I think it goes back to the quote that you said, truth and beauty. That's all I got. I'll leave you at that and let your mind imagine whatever it is, truth and beauty.
Yeah, I mean, it's one of those things where you don't really have to put a punchline on any of this. You just say, Kevin O'Leary continues his steadfast support of SBF. Bam. That's what we got.
That's all you got to leave it as. Well, it seems we were saying that this seems like his book tour and all that. Well, maybe it was preemptive to something. The Senate are talking about the FTX collapse today. Can you elaborate on that, Nolan?
Yeah, it looks like they're going to be at least trying to uncover what's going on. And now we don't think they're going to be able to uncover much more than what we already know. This looks like it's going to be a bit of a travel log, if you will, and could even be worse than we think, because in the same way that misleading folks about improper risk management can actually remove the criminal liability to not living up to your fiduciary duties, right? To not admitting to fraud, essentially, right? Because I think that's what SBF is continuing to say. I did not knowingly do this. I did not knowingly do this. So trying to hide behind a veil of whoops, I didn't know what I was supposed to be up to. My favorite meme about it all is the one where they're contrasting the SBF before the crash, where he was a big brain and everyone was like, oh, the boxes, he had this unbelievable explanation once of a Ponzi using these boxes and how complicated it was. But now they had the contrast to that, where he was, his brain was too melted that he couldn't even figure out which blocks to put into the simple shape game that I think crows know how to play, and like certain birds can be taught how to play, but he just couldn't do it, right? So that's what they're going with here. The excuse is he was so smart before, but now he's so casually stupid about things that anyone would know better. So I don't think you're going to hear more in this story than more from the Senate hearings than the guy who couldn't figure out how to hire an accountant.
Yeah, and that's funny. I think that was a great meme. I saw that one as well. Well, Bitcoiners building in the bear market. So this is all the noise, or what mainstream media is pushing: SBF, the crash of FTX, FTT, all these different tokens. But Bitcoiners are building in the bear market. So yesterday was published by Paul from Voltage. They announced that they're going to be doing the Lightning Privacy Research Report. So basically, it's going to be a group write-up of him, Ben the Carman. He's from the Bitcoin company, is pretty infamous with doing DLCs, or discrete log contracts, on Bitcoin. So people say we don't have smart contracts on Bitcoin, but we have NFTs on Bitcoin. We have smart contracts on Bitcoin. You just need to look and find the right information. Evan Kalutis of Zeus Wallet. So it's a more privacy focused Lightning wallet that can connect to your node. Max Hildebrand of Wasabi and Tony Giorgio, who recently joined Voltage as well, are doing a privacy research paper together. I think this is awesome. These are a lot of really well-known Bitcoiners. They're not just well-known or influencer types. They are ones that have actually built and code things. So I'm really, really excited for what's coming out of this. And I think it just shows the more robustness. And Bitcoin, the Lightning Network is very private to send from someone, but when you're receiving, it actually kind of, I don't want to say it doxes yourself, but it gives a lot of information about your node, and a sophisticated hacker could use that to figure out your IP address or remotely where you are, unless you are using privacy techniques such as Tor. So that's just kind of my caveat with it, but I'm really excited to see what they uncover. Recommendations that they'll probably recommend to Lightning developers to make it more private and to enhance the Lightning Network as we watch that network grow. While the price is crashing, the Lightning Network has continued to grow from, I believe, 1,000 or 2,000 Bitcoin locked up in Lightning channels. We're well over 5,000 now on the Lightning Network. So really excited to see that go pretty much parabolic while the price is going the opposite direction. Anything you want to add there, Nolan?
Yeah, it's always this debate between Bitcoin, the commodity itself that we all know and trades and people use it, but the actual commodity of the chain, right? Using the chain itself as a commodity and seeing what can be, seeing the uses that can be brought out of it. I continue to be of the belief that privacy is something Bitcoiners will have to buy like a commodity itself. So another level of abstraction. I hope that's what these guys end up discovering, because that's what it'll come down to. It'll be ways to use it that will help us claw back and gain some privacy. So
definitely.
great.
Yeah, and there's a great connotation. Big B, so big B Bitcoin means the network. Lower B Bitcoin means the currency, or the asset value that people talk about, the price. So that's something that I've learned. And, if they write properly, that's the way they're supposed to denote between the two. But moving on from that, talking about elections being tapered with. Nolan, you want to tell us the story? It's kind of twofold here.
Yeah. So Elon Musk has come out and said that, I'll get the exact quote, Twitter has interfered in elections, Elon Musk said. So Twitter basically, with Elon Musk taking over, is trying to put light on some of the issues that it's done in the past and how it's been involved. He's already mentioned that censorship was heavily one-sided, and he wants to share that. Interestingly, he's going to make Twitter the publishing apparatus for that. So he's going to actually start publishing reports from Twitter. They'll be the publisher of this report. So I think what he's doing here is sort of teeing up that Twitter is going to be a publisher and is going to come up with a lot of interesting material. And the election piece is one of them. Now, we already know in the United States, just look at what's going on in Arizona, right? In Arizona, we see that elections have changed over time to be made more convenient, right? So elections have been made more convenient. Now, people who are involved in Bitcoin start understanding that these things can't be done without trade-offs, that anytime you make a decision to make something more convenient, you'll have to actually give up something in return in the case of the organization of elections. So in this case, it's sort of credibility, right? You can make it credible by having it the day of and everyone comes, but that's actually hard to use. So that's not easy to do. So the debate for a long time has been easy versus credible. And design choices have been accepted for a while now. And the choice of credible and easy to do, that's not available to us. That's sort of the trade-off, right? You can't have both. If you make 3 weeks available to vote, a month available to vote, if you make all different means of voting available, well, all kinds of things can change. And what we're hearing with Twitter now is that involving themselves in elections and adding to that process is a major problem. And it's another one of these, even just promoting elections from the point of view of ease of use without even caveating that there's something you're giving up in return, especially if you're framing it in terms of race and religion and all these other things. It's not an honest discussion about the engineering principles at hand. So it can be a very subtle move to influence elections. It doesn't require much. Often it requires you to not say anything or do anything about a particular element, and that might even be the case with Twitter. So looking forward to Twitter being the publisher, looking forward to hearing all the news that they have about interfering in elections and being involved in elections.
Yeah, and it kind of expands too. So President Nayib Bukele was saying the U.S. State Department says that the little country of El Salvador, about 6 million people, tried to interfere in U.S. elections. Nayib Bukele was kind of laughing because I think he has issues of his own that are going on in his home country. When you put it in perspective, El Salvador is smaller in populace than the population of Manhattan. So it's like this little old country compared to the big mighty U.S. election. It's funny that he says the U.S. department's trying to portray El Salvador as doing this. I think, kind of like what we say, like, I think a lot of countries try and interfere in other countries' elections. I mean, it's to their benefit if, stake in the game. If you're a person that'll be more favorable to your country in terms of sanctions or in terms of trade policy, like, it's in your benefit to try and interfere with elections. I hate to say it like that. So it's not to poke at just El Salvador. I think it's like a global thing. Like, if you're trying to compete and you're trying to get better trade with the U.S., you want your person, left or right, in power to help your country out. So that's just my 2 cents on it. What do you add to that, Nolan?
Yeah, I think as Americans, it should just be assumed that everyone's trying to interfere in American elections, because what's the cost of getting caught, right? It's hardly anything. We saw a couple of those Russian guys who got caught a couple of years ago, and whatever happened to them, no one knows, right? So if you're
the cost of doing business in a way, you know what I mean?
The cost of doing business, yeah. A certain amount of fraud is implied, as Satoshi once reminded us, right? A certain amount of fraud is implied. So in that case, that's what we've got, and we should just anticipate that everyone is trying to influence our elections. And I understand why Bukele might have denied it here. Maybe he's not aware. I mean, that's lesson number 1 of politics: is don't tell. If you're up to something, don't tell the person above you. You have to have plausible deniability at all times. But it seems absurd to imagine that a country isn't trying to influence. All countries aren't trying to influence American elections. Of course they are. Right.
And let's not kid ourselves. The U.S. influences probably the most elections of any country in the world.
There you go. And that's I think the most important kicker in it all here, is that America has been participating in elections abroad since they had this idea of Pax Americana. So
definitely. Well, Elon's trolling continues. So aside from more, it seemed like a troll tweet of, Twitter interfering with elections, but I think he was being more truthful. He tweeted out, "Thanks, Tim Cook, for taking me around Apple's beautiful headquarters." And he kind of just pans across this beautiful lake. It's obviously not a building. You're like, where is Elon? And then he followed up with a few minutes later with, "Had a good conversation. Among other things, we resolved the misunderstanding that Twitter and Apple had about potentially being removed from the App Store. Tim Cook reassured me that was never considered doing so." I don't know, just taking at face value, I think it's a little bit of he said, she said.
How many days did it take them to say they didn't consider it?
Yeah,
you think they were
they didn't clear the air.
Ago? I got an idea for Tim Cook. You had 2 or 3 days of rumors running around. Here's an amazing idea. Why don't you tweet out it's not true?
And it would be the only tweet on their account, because their account's clear right now. So
exactly. And, isn't that what Elon Musk does all the time these days? He discounts rumors on Twitter. So he's modeling how to discount a rumor properly. Tim Cook chose the not proper route to discount a rumor, which is just wait 3 days, invite the guy over and say, oh, by the way, none of that was true. Well, what the heck was Elon Musk doing there? So, but we gotta congratulate Tim Cook for doing the right thing. I'm pretty sure he understood at a certain point what he was up against. And even, as I predicted, Tim Cook, could you imagine the amount of personal pressure on the guy? I know he is part of that liberal world, and that's fine. We like a world full of debate, and we're not trying to, say there's anything wrong with that. What I mean is a lot of his friends were probably calling him and saying, look, Elon's a big problem. Can you help us out? So it's almost this thing where he could have personally helped, but of course, the company is much more important than what he can do. And I believe it would have been the end. I was worried he was going to do it, but he would have been fired instantly by the board, is my bet. So, but personally, there was a possibility because of that human element, right? Where if enough of your friends really want you to do something, you might end up doing it. And but no one in their right mind would have done that if they were thinking of their company first, because it could have been the end of Apple, honestly.
Yeah, that's true. Well, so Larry Fink, we were talking about him recently, but he finally has a sound clip, and in the interview recently during the New York Times thing that Andrew Ross Sorkin was interviewing SBF on. Do you want to talk about that more, Nolan?
Well, Larry Fink, besides closing the ESG fund that they had going, he was the main proponent of ESG. He's now come out and said that they did too little due diligence on FTX. So the problem was they just didn't do enough due diligence. But isn't that what you pay these guys for? I mean, the whole point of one of these advisors is that they're the ones doing the due diligence. So if they're going to be the standard bearer for due diligence, and then they're going to go and ask, in this case, the SEC, for example, to legislate along the lines of ESG. Because remember, they're asking for legislation that would force ESG considerations to go into SEC framing or how investors approach companies and how information is divulged in terms of disclosure to investors. And if there was this sort of ESG component to it, they would have more information and would be able to invest along those tracks. This has all been a BlackRock scheme from the start, and it's not even working internally. And now the point is sort of lost, because if they're going to look for more due diligence and they can't even do the basic due diligence, then why should anyone do any of it? That's where we're at. So thanks BlackRock for making us all understand the whole thing is stupid and worthless. It's excellent.
Yeah, and it was funny. He skirted the question and threw Sequoia under the bus. He's like, yeah, well, Sequoia did their due diligence and maybe they were tricked. So he made it seem like we did our due diligence and it was all fraudulent. We got tricked. And besides Sequoia, the infamous VC firm out of the Silicon Valley, they wrote a much larger check than BlackRock and obviously have less assets under management. But he just kind of skirted the question and showed, but exactly to your point, it's all just vaporware and garbage, in my opinion. Well, the FTC seems to be changing their tune recently. So yesterday, at Princeton, the CFTC chair, Rostin Behnam, said that the only cryptocurrency that should be viewed as a commodity is Bitcoin. This is walking back something that he said in October. He was like, maybe Bitcoin and Ether would also be commodities. But this is something that's very interesting, because this is not just an October thing. They started back in 2019 saying that, maybe ETH is also, a commodity. I don't know how they come up with that. If you're using the Howey test, as Gary Gensler has said countless times on record, using the Howey test, if something passes the Howey test, it is deemed a security, which Ether does in pretty much all four of the templates of how it is. There was a pre-mine, there's a board, there's a bunch of people that are paid out. There was, all these different criteria, and it passes it pretty much with flying colors. But it's very interesting that they walked back the remarks. Some people said that if ETH stayed on the proof of work way, that it would still be grandfathered in as a commodity. But since they've done the merge, which we've talked about on the show back in August, I believe, or September, when they did the merge, that allowed them. Now they're on a proof of stake system, and that reeks even more of a security. Anything else you want to add to this, Nolan?
Well, I think the color here is that the CFTC itself needs to be questioned. This is a group that gained a lot of authority in the American trade system post-financial crisis in 2008. And now, even that they're coming in to weigh in on something as big as Bitcoin and other coins, look, the entire CFTC board has been appointed as of 2022. They're all brand new people. There is a world where we can imagine that regulatory capture has already happened. That the amount of penetration that SBF had inside of the CFTC, we don't actually know the end of it, right? We don't know the end of it. So I continue to be completely suspect of the CFTC. They banned election prediction markets this year, and their excuse was the famous none. So whenever you see no excuses for something that's obviously absurd and commercially makes no sense, like why would you get rid of a market that functions, election prediction markets? Not a huge market, but people like to play. And why would you get rid of it and then not give an excuse? You have to imply corruption. You have to imply it. And at this point, it's very difficult to see the CFTC having much credibility going forward. So while they might have all kinds of different prescriptions, I continue to not welcome their point of view. And you can even underline the SEC, by the way. The SEC just had a case, I think this summer, where the entire constitutionality of the SEC's ability to have an adjudication like a judiciary, the ability to pass judgment and enforce penalties, that itself is unconstitutional because it's a type of judge within democracy and doesn't adhere to the separation of the legislative and judicial branches. In America, judicial, legislative, and executive are totally separate. And in this case, this was an instance where the SEC actually became underneath the legislative branch, and that made no sense to people, or the executive branch in this case, pardon me, the executive branch. And that made no sense. So there's an argument here where there's an argument to be made here that both of these bodies are out of their minds. And obviously in a Bitcoin standard, they won't exist. So I'm hoping that the Senate inquiry on FTX actually goes into places like the CFTC and starts looking for internal rot and corruption, because I bet you they'll find some. Don't think it's going to happen though.
Yeah, definitely. Well, do you want to talk about the mining report went live? So Daniel Batten, we mentioned him a week ago, friend of the show, says he has a mining report that went live. Do you want to tell the audience more about it?
Yeah, part of his report, he actually cited one of my drawn boards that I use for the breakup each morning. So he brought one of them in. It's the one that contrasts dollars and fiat, and that basically crypto is just a subcategory of fiat and Bitcoin is not a subcategory of dollars. So he's got a great report here. And it's about on-grid, off-grid Bitcoin mining. He took 42 different companies and just drilled down and gave a really good profile. Now, there's so much going on in the space right now. There's capitulation happening. So this comes in at a really opportune time, and it's a pretty interesting snapshot. So I'd go have a look at it. You might end up seeing Daniel. There's a pretty good chance. We haven't discussed it yet, but you might see him between May 18th and 20th in Miami for Bitcoin 2023. Get your tickets. We've got a code. And we're going to be there. It's going to be great. We're going to have all kinds of great speakers, and we're definitely be talking a lot more about energy and mining. I'll be doing a lot of the programming for the show, and one of my big focuses is on making this an energy show, talking a lot about the energy industry. So Daniel has come with this report, which really does connect the energy industry to the mining industry in a pretty unique way, and I think we're going to see more and more of that. So I don't think of energy as a subject of the event anymore, as a subcategory of mining. I just think we do energy, energy literacy. We're in the game of energy literacy now, because Bitcoiners are going to take over US energy. That's our next frontier. Wall Street already got it. On to energy.
I'm excited for that, and that's really cool. Well, Apple wants their cut. So while they resolve things with Twitter and Elon, Coinbase tweeted out this morning, you may have noticed that you cannot send NFTs on Coinbase wallet iOS anymore. I'm not advocating using this wallet personally because it has a bunch of altcoins and there's a lot of risk to that, but this is because Apple blocked their latest app release update until they disabled the feature. Apple basically wants their cut of 30% of all of the revenue coming through the transfer of those NFTs. It may not be a lot. I know back in the peak, there was like rocks selling for $2 million a piece, or, there was art going for multi millions. I mean, I don't want to get into history, but I was talking to a lot of our art guys at Bitcoin Magazine. They say like art historically is how the rich kind of launder money. And, there's a large precedent of like, oh, like I want to do a favor. Your son maybe has this painting and I buy it for a large sum of money to maybe buy some influence. I'm not going to say that relates to nowadays, but I'm just putting it out there. Nolan, you want to add anything to this?
Well, there were a few $500 million NFTs that were sold in the top of the market, right? $500 million NFTs that were sold. So definitely there was for sure wash trading. We've known that for a while. But, we covered the story yesterday on the Web 5 discussion with Jack Dorsey, and that's really what they're getting at, right? Websites again. And yesterday Elon did the same thing. So the Twitter Blue, the $8 fee in order to circumvent the 30% given to Apple, is now only available if you use the web page. And that's kind of the same issue that Coinbase is talking about here. So now that everyone's talking about the 30% fee, because it took 3 days for Tim Apple to say they never considered removing it from the App Store, well, they're finding out that there is a strategy, a whole dialogue now about the 30%. And if you go to the websites to buy these things, you avoid the App Store fees. So Twitter Blue now only available on the website version, and it looks like Coinbase is doing the same, and you'll probably see more.
Yeah. So I think the last story before we bring in Ansel for Fedwatch, I know you guys are debating. Sorry, we didn't have the episode yesterday. Thursday is going to be going forward, going to be our new time. But it seems Tucker Carlson, one of the most infamous broadcasters in the United States, seems to be fully orange pilled at this point. Nolan, if you want to go into it.
Well, this is a big deal because Tucker has the largest audience in America. He's probably one of the few news people that either side of the spectrum can at least name. So he's got sort of name recognition across the board. And on his own show, it, of course, is a daily show and gets widely shared in conservative circles and Republican circles. So because of that, if you have a person who is an excellent communicator, you've got to give credit where credit's due. The person can certainly string together logic and is very persuasive. So having someone so persuasive who's also had high quality guests on his show, as you said, he's had Bukele, who had a nice discussion about Bitcoin with him, Michael Saylor, who had a discussion about Bitcoin with him, and of course, Max Keiser now. Tucker tried to come to our show last year. He was around the event and has shown interest in Bitcoin for a while now. And I still am waiting for him to actually utter the words, the separation of money and state. There you go with the Bukele Bitcoin Magazine issue. So so he was around the venue last year in Miami. There's a chance you'll see him this year. We haven't really spoken to him yet, but his name keeps coming up and he keeps being relevant in the space. And, if he does come out with something like separation of money and state, it'll be hard to ignore someone like that, no matter what their other politics are, because in the end, the story that we're following here is the separation of money and state. And basically anyone who wants to take the mantle and discuss that, I think we have the time to listen to them. So there you go.
Yeah, definitely. Like as I was holding up the Orange Party issue here, the reason I hold that up is because he was interviewing Max Keiser, and Max held up our, Orange Party issue and then handed him a copy. So we know for a fact he has at least one copy of the Orange Party issue. I hope it's going around the newsroom to read a lot of the great articles in there. We put a lot of work. You can get a copy at bitcoinmagazine.com and use the code BMLive to get 10% off your subscription for it. And we're going to be joined shortly by a new episode of Fedwatch with Ansel. And Nolan's going to be joining him because CK was not able to make it today. So really looking forward to this episode of Fedwatch, and stick through us after this commercial break.
What is up, everybody? Welcome back to another amazing episode of Fedwatch. My name is Ansel Lindner. I'm usually joined by the brilliant co-host CK, but today CK had a conflict. Nolan is going to be helping us pull up the slack here on the show. Nolan, how are you doing today? What's
Ansel,
up, man?
I love life. I can't complain. I got a bit of lag though. I'm making sure everything's okay. Let's see what that is.
Okay,
Not
hope
on
it's
mine.
not on my end.
You were coming in laggy. Okay, I'm good.
Well, I just got fiber put in the house, so I hope it's not me.
It's almost like you're coming in too quick. You're ahead in time. You have a time machine one. It's a fast one.
Wow,
I've got
awesome.
a Starlink here, but I had my first trouble with it the other day. The cloud coverage was too thick and slowed her down. But we're going to be okay.
Wow. Technology, man. We're both on the cutting edge of technology here. So, all right. Well, today, first, before we get started, guys that are watching live, hit like, subscribe, both on YouTube and Rumble. Fedwatch, probably the most unique macro show in Bitcoin. I'm very proud to host it here on Bitcoin Magazine. So hit that like and subscribe. Join us now at our new time every Thursday at 1:30 p.m. Eastern. You'll see my pretty face every single week. So, all right, today we have a lot to cover. We're going to cover the Powell speech yesterday at the Brookings Institute. We have a few clips. So we're going to watch that, get the truth from the horse's mouth, what he's saying. Then we're going to look at a few macro charts. And then there's a little discussed kind of military escalation going on in Turkey. So we're going to read an article real quick about what's going on in Turkey. And that's going to do it for this week. So Fedwatch, if you're watching for the first time, Fedwatch is a very different sort of macro show. We have been contrarian and using independent thinking to kind of use a different lens to look at macro and Bitcoin. From the very beginning, we've taken a big picture look. We do talk about the data, like the individual pieces of data that come out about the economy, but we take that back and we try to plug it into a holistic big picture of the economy. We've been ahead on the inflation deflation debate. We called the dollar almost exactly right. We were the only Bitcoin podcast out there that was a strong dollar, had a strong dollar thesis over the last couple of years. We've been ahead on China. We've been ahead on Europe and the energy crisis and all of this stuff. So we're taking all of this. We're building a holistic kind of narrative that's different from everybody else. And we're putting it out there. On those lines, I also have a new article that should be coming out in the next couple of days on Bitcoin Magazine. It's about deglobalization of both supply chains and credit markets and how Bitcoin fits into that, how I see Bitcoin fitting into that. So that's how Fedwatch is different. I have more plugs, but Nolan, do you want to plug something for Bitcoin Magazine?
Yeah, well, I do I'm glad you mentioned it because it actually dovetails with what you're doing. I also take a different look at stuff on my show at 8 a.m. every morning. We do the breakup, and there we take a look at we just treat it all as psychology, right? That the economy, even though we're talking about numbers, has nothing to do with math. We're not talking about math, right? We're talking about psychological states, and that can be at times about persuasion, which is how you can convince someone of something that's only half true, and then get it to seem completely true. And we just basically try to treat the dollar and contrast it with Bitcoin as both of them are psychological engines propelling an economy forward. I continue to say that Bitcoin is the stronger engine because it's very easy to imagine a future powered by Bitcoin, and very bleak when you look at the contrast, a future powered by the dollar. Not looking good. For some, for sure, it looks great. For the others, not so much. Wouldn't want to be in China right now. Wouldn't want to be in China looking for pork belly.
No, well, that's very similar to what I've said about Bitcoin gives you a brighter vision of the future. All the green shoots are going to be on Bitcoin, and we can see this dichotomy of the future, but eventually everyone will start seeing that the old system is like geriatric and stagnant and all this, and then you have the Bitcoin future that is bright. So yeah, very, very similar narratives. Now my plugs are, I also do a podcast that separate from this, Bitcoin and Markets. You can find that at bitcoinandmarkets.com. Fedwatch and Bitcoin and Markets are both on Fountain FM. So you guys should go and make sure you're subscribed over there and help promote, Lightning and this new way of supporting content creators over there on things like Fountain. So go check out the Fountain app and look for Fedwatch and Bitcoin and Markets. I also do, my live stream is not on YouTube. My YouTube channel was terminated about a month ago, and I haven't gotten it back yet. So I do it on Telegram and Twitter Spaces. Every morning I simulcast on those two things. So, and last plug here, guys. In the bear market, we need to share. So listen to the podcast, share in the bear market. Support your content creators that you listen to, that you get value from, and we will all make it through this bear market together. So, all right, that's all my opening remarks. Should we jump into Powell's comments?
Well, and just to mention that I do believe that this Bitcoin winter will come to an end. I have a day.
Oh, yeah.
It's May 18th to May 20th in Miami, when we all get together again for the Bitcoin show. And winter will indeed be over by then. And we will have a chance to enjoy our great community, where we're going to learn all kinds of stuff. It's not just about financial literacy. It's about energy literacy. It's about the tools you need to make it in the 21st century. That's the point of our show. We're taking up the slack. Basically, the universities have all failed you. All higher education has failed you. We are the only way. And
we need a paradigm shift.
We're there to flip reality upside down.
Yeah.
So let's start with our, reality. The base unit of reality is money in this case, right? Time is money and money is time. So tell us, Ansel, what's happening at the highest levels of the Federal Reserve.
All right. So the first thing we're going to check out is a few clips from Powell. Oh, I hear a reverb there, Chris. Sorry about that. I have an intro here about 2 minutes, and then we can get into the clip. So Powell is speaking at the Brookings Institute. This is, a DC kind of based think tank where a lot of the old chairmen go to write a blog or to write articles for Brookings. Bernanke, 2 Fed chairmen ago, he famously, in his first speech at Brookings, after, becoming a civilian again, he said that monetary policy is 98% signaling. 98% signaling. So that's gives you a little clue of where I'm going to go with this whole story. Now, also before Bernanke was Alan Greenspan, and he had obviously the famous Greenspan conundrum, where he didn't understand why long-term interest rates were acting the way they were. So he didn't understand interest rates, even though he was supposed to be the maestro, the very famous maestro at the Federal Reserve. Then also in FOMC minutes, that's the Federal Open Market Committee, where they make their policy decisions. In those minutes, Alan Greenspan plainly said that they didn't know how to count money. That it wasn't M2, it wasn't M1, it wasn't base money. They had no idea what was going on. They couldn't measure money. So we have not being able to measure money, not knowing how to control interest rates or what interest rates are doing. Then we have Bernanke saying it's 98% signaling. I mean, what does the Fed do here? So anyway, I wanted to set that up for this conversation here about Powell and what he is doing. So this speech is monetary policy. This speech is as important as Sorry. This speech is as important as the FOMC meetings. If you go back and look at like the charts of the stock market, you see in mid-August when Powell made his Jackson Hole speech, that pretty much marked the top of the stock market back in August. So these speeches mean a lot that are kind of off schedule of the Federal Reserve's calendar. They're on just the chairman's calendar. These are Federal Reserve policy speeches. So I want to, when you're listening to him speak here, try to think like, what is he signaling here? What does he want us to think? So that's all I have for a lead up. Okay, Chris, sorry. Now I'm ready for the first clip here, starting at 2 minutes and 9 seconds.
It's great to be here today. It's great to be back at Brookings. So today I'm going to offer a progress report on the FOMC's efforts to restore price stability to the U.S. economy for the benefit of the American people. And that report must begin by acknowledging the reality that inflation remains far too high. My colleagues and I are acutely aware that high inflation is imposing significant hardship straining budgets, and shrinking what paychecks will buy. This is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. We currently estimate that 12-month PCE inflation through October ran at 6.0%.
All right. So he's talking there obviously about inflation and about price stability. He hammered that phrase home, that term home, price stability. And I just want to say, like, price stability isn't necessarily a good thing. Prices convey information about the market, about market conditions. So we want prices to actually change. We want prices to be volatile and give us this information that's going on in the economy. Price stability is kind of a phony goal. And the only reason why they have that phony goal is because they can't measure the money supply. They don't know what the supply of money is. So they have to target CPI, which is just a basket of prices, right? With a algorithm, a weighting algorithm on it. So anyway, they're using price stability, and I just wanted to hammer that part home. Nolan, do you have any comments about this very first section?
Yeah, it's again, you see where Bitcoin supplants marketing with engineers, right? The engineering of the network actually supplants the need to project marketing, spin, and framing. And because, of course, that's exactly what we're talking about. When we say these are psychological engines, when we say this is all psychology, when we make that the basis, when you take the frame that Powell's taken, you're actually requiring that financial engineering aspect to be almost massaged into the narrative, because if it's not there, there's no way to account for it, and it would be rejected, right? Whereas in Bitcoin, we've actually lowered the threshold for even understanding what's going on. We know how to count. We can count again.
Right.
Hey, because it's that simple. If you can't count, you can't manage. If you can't measure, you can't manage. That's a famous adage in like business management schools, right? You can only manage what you measure. And if you don't measure it, you can't manage it. So what are we really measuring in America? We're measuring sentiments. We're measuring those kinds of things. And I continue to get worried when you hear about that. Okay, he's acknowledging the pressures of the American public. Well, I'm sure you've brought up the theory on this show several times, the dollar wrecking ball theory, which looks like it is, or the dollar milkshake theory, like the idea that all of the liquidity in the world has now every other government printing money, all of their excess money gets converted in the end into US dollars. So everyone's printing is how we're printing. And they get angry when there's arbitrage between them. You're seeing already, I think 2 weeks ago, you had the South Korean central bank saying, oh, you Fed Reserve, it's not fair. It's really hard. We can't compete with your high interest rates. All of the people are leaving our country and trying to get the better interest rates in your country. They're pulling our money out of Korea. You can't keep playing this way. It's not fair. There's no fairness is something made up so that stupid people
kids
talk about. Yeah, it's for kids. You know what I mean? Right. It's not real. Like, there's no fairness. There's no fairness here. So we're going to see what kind of pressures he's under. We've already seen a brewing fight, really, between fiscal policy and monetary policy. They're fighting inflation, and then you've got the politicians handing out stimmy checks for gas in California. Right? At a certain point, they're at cross purposes, and you're going to continue to hear schizophrenic things that make no sense to anybody. Right?
Exactly. All right. The next segment, we are going to talk about PCE. Now, we talked a lot about CPI in the past, and people understand CPI is a basket of prices, and they understand what that is. PCE is just a different algorithm, but it has some similar traits. Like there's headline CPI and core CPI. There's also headline PCE and core PCE. So PCE just came out yesterday, actually, for it's way delayed compared to CPI, but he's going to talk here about these constituent components a little bit and tell us what he's seeing. So Chris, next clip, please.
To assess what it will take to get inflation down, it's useful to break core inflation into three component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services ex housing has fluctuated, but shown no clear trend. And I'll discuss each of these items in turn.
All right. So he broke down the three parts of core, which is goods, housing, and services. He said goods have come down drastically, and we've covered this a lot here on Fedwatch, saying, the inventory cycle, supply chains were wrecked, then supply chains flew forward. Now there's a big inventory hangover, and prices are going to come down. Also, demand is shrinking because, retail sales are down as well. Then the other component is housing, and that is screaming north. Now, the next clip I have is about to explain the housing market a little bit. And then the third thing was services, which he says has been mixed. So out of this core, we can kind of take away that goods are going down, housing is still going up, and services is neutral. So any comment on this, Nolan, or should we just jump into the next clip?
Yeah, jump into the next one because I want to hear it I want to hear it tailed onto this one before I react.
Okay. We're ready for you, Chris.
Housing services inflation measures the rise in the price of all rents and the rise in the rental equivalent cost of owner-occupied housing. Unlike goods inflation, housing services inflation has continued to rise and now stands at 7.1% over the past 12 months. Housing inflation tends to lag other prices around inflation turning points, however, because of the slow rate at which the stock of rental leases turns over. The market rate on new leases is a timelier indicator of where overall housing will go over the next year or so. Measures of 12-month inflation in new leases rose to nearly 20% during the pandemic, but have been falling sharply since about mid-year. As Figure 3 shows, however, overall housing services inflation has continued to rise as existing leases turn over and jump in price to catch up with the higher level of rents for new leases. And this is likely to continue well into next year. But as long as new lease inflation keeps falling, we would expect housing services inflation to begin falling sometime next year. Indeed, a decline in this kind of inflation underlies most forecasts of declining inflation.
All right. So he's talking about housing inflation in this section, and he mentions what I've talked about. I think it was 2 weeks ago with CPI coming out, or maybe it was last month. I don't remember, but there's this big lag in the housing part of CPI and also PCE. And he talked about it right there that because most people don't get new leases every month, right? So they wait till the end of the year so it's a slow moving indicator that has to price in these rises over a longer period of time. So it's automatically about 12 months delayed. And that makes sense when you look at what's happening with the housing segment or component compared to what happened with the goods component last year at this time. So that was, at the peak of the inflation or CPI adjustment for goods. And now a year later is going to be a peak for housing. So I just thought that was interesting.
Let me try and repeat what you're saying. It's like in consumable items, the reverberation of COVID was easier to acknowledge, manage, pass through the system than housing rentals in particular, because the blockage wasn't even acknowledged, let's say, until even further down the line. And now for it to work out of the system, the nature of the contract is it is just going to work itself out over a longer period of time.
Yeah, and you can think about the moratorium on evictions that they had during COVID too. So that is going to delay it even further. So pretty much, yes, the goods inflation, quote unquote inflation, the price change in goods was more obvious and what we would expect. They went up and they came down. Well, housing didn't go up very fast, and now it's going up later, but it will follow probably goods inflation. So there's just a timing delay in the housing segment. Now, if I were Powell and I would see this, I would be like, well, we know where the housing component is going to go. It's most likely going to follow where goods inflation is going. So we don't need to necessarily continue to push forward with what we're doing, because we know that inflation's PCE has kind of peaked and it's going to be coming over. So anyway, I thought that was interesting. Then do you have anything more to add on the housing, or should we go into the labor force participation?
Yeah, let's go into labor force participation. With the housing, for me, it's just it's exactly that. It looks like when I can't help but see the domestic housing situation in international terms as well, because what's going on in China, well, it'll have to have an effect here, because as I understand, it's very difficult to know what's going on in China precisely right now, but it looks like the housing sector has completely collapsed. Like they're not paying, there's no mortgages being paid, and all of it's just being, sort of taking second stage because of the protests and everything else going on simultaneously. But if we're going to talk about a major crash in one area, I think the nature of real estate now, and especially the nature of the hottest markets in America that have really pushed everything up, New York, San Francisco, LA, it was foreign in nature, right? There was a lot of foreign people using US real estate as piggy banks and as a safety deposit, basically, that your money was secured. Now, I don't know the actual numbers on that. It's just an impression, so I don't want to make it sound like I've done any research. I've read.
Well, I think that's mainly on the West Coast. I think, from Vancouver down to LA, basically, I think those markets have all been really pumped by Chinese or even Japanese coming in and buying properties. But most of the country, I don't know. The most current news that I have on the real estate market is that the government has come in, it's cut some rates, and it's given some bailout packages to these largest developers. So it looks like the acute stress is over for the time being, at least on the property. But they have fallen. Yes, they've fallen 25, 30%. And when you have 70% of the household savings is actually real estate, that is a big cut to overall wealth for normal normal Chinese people.
So I'm definitely expecting almost like it could be one of these global stories at some point.
Yeah, I mean, it affects global credit markets. That's for dang sure. The Chinese real estate is the largest single asset class in the world. It's something like $50 trillion in Chinese real estate. So if they drop 25%, it's definitely going to affect the credit markets around the world. So
yeah.
All right, let's jump into the next one. It's labor force participation. We're ready for you, Chris.
Comparing the current labor force with the Congressional Budget Office's pre-pandemic forecast of labor force growth reveals a current labor force shortfall of roughly 3.5 million people. This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall participation, however, remains well below pre-pandemic trends. Some of the participation gap reflects workers who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly. In addition, many older workers lost their jobs in the early stages of the pandemic when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers, given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people. The data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths during the pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain of the Fed.
Going the extra mile is more rewarding.
All right. Well, that we can cut it there. Just had a couple seconds left on that. So it's very interesting about the labor force. He's saying 3.5 million in the labor force, or not in the labor force anymore. So, you know, we talk about unemployment rate, but we don't talk a lot about the labor force participation rate. That is the amount or the percentage of working age population that actually has a job. I think pre-pandemic, it was about 63.5%. And now it's down at about 62%. And you can see that's 3.5 million people difference. So I think it's one thing that he didn't mention. He did mention COVID, but he didn't mention the treatment for COVID that could also be possibly keeping people out of the labor force. You know, if you have severe reactions, then you might not be able to keep your same job, right? So there are a lot of things that he didn't mention there, which I thought he could have said. But what's your thought on the demographics and labor force participation?
Yeah, that my instinct was right on you. It's the cat on the roof. You know, the cat on the roof is like what you say before there's sort of bad news, right? You know, there's a cat on the roof, and then, you know, he's dead, right? So it's the thing you're not hearing. It's the part of the sentence where the bad news is that they haven't actually delved into, which is this quiet quitting, which is this incentive to even work because the system is breaking, right? Because we see right now, I mean, I go to the you know, I go out and about and I see people in restaurants or wherever. I don't really eat in a lot of restaurants anymore. I'll be honest, COVID totally wiped that from my life. But you still see it around. You know, go try and do a basic transaction in a store these days. They don't know the payment system. They don't know what the product is. Everyone's new. You know, going around shopping the other day was, you know, it was amateur hour. And these are for simple commercial transactions. I'm talking about buying an iPhone at a T-Mobile. And they have a lot of trouble now, right? Now, that could just be my experience. But what you see is this lack of motivation, this lack of orientation around what's happening next and what we're going to do. And that's what wasn't mentioned. So the good news is, though, there's plenty of jobs. And all we really need to know, right? All we really need to know about our economy, I think in the end, are two things. And I think Bitcoin is going to bring this home. Once we get rid of the obfuscated fake science of these economists and everything else, it's your energy policy, right? Your energy policy, because that can actually determine a lot without you even realizing it. Like, I don't think Texas is ever in risk of being poor, right? They're just so rich in energy that what could go wrong other than, you know, they just have everything. They have every type of energy. And then the other part is labor. If people are working, people are motivated, getting up, going to work, doing their thing, great. What I heard from there is some boomers retiring, predictable. That should be priced in more or less. And if some of them went early because of health, we can still handle that. Luckily, Americans have enjoyed high levels of immigration for years, and that's allowed us to have a strong replacement rate. And the demographics of the United States are actually really good compared to every other country in its economic level of sophistication. So Europe, not the case, right? Really not the case. They have major demographic problems. China, you know, there's people who say everything that's going on in China right now is really because the demographics are a lie, and only Xi understands that the population is much lower, right? Yeah, there's stuff out there saying that there are about 100 million people off in the census. But the problem with the 100 million, it's not 1.4 billion, it's 1.3, but the 100 million missing are not what Mr. Powell just mentioned, people retiring and that stuff. No, they were young people. They didn't have them. They weren't in the mix. They never were born. And, you know, it's not really a sophisticated census system in China. And when they finally figured it out a couple of years ago, I'm told a lot of what's going on in China today can be explained by that fact, and that Xi is the person who's managing this outside. Now, again, speculation, right? Speculation.
Yeah.
But what I mean is when I hear Powell say demographics, labor force, strong, right? And he did sort of mention that immigration has to continue to make up for what was lost. That makes sense to me, right? That makes sense to me.
Yep.
And then the other piece that he didn't mention, energy, but that's just the reality of America, and we're going to be okay for energy. The rest of the world, good thing this is not called the ECB watch, because we would have another story.
Well, to touch on a few things you said there, China, their most recent census data is showing that 100 million shortfall. So
it is public. I didn't know that. Okay. Yeah.
Yep. So there it is 1.3, and it's a lot of the millennials. It's basically the millennial generation that they don't have at all, really.
Mm-hmm.
So that's really bad. And one thing I wanted to mention about retirees or early retirees, because these are people that are retiring before they expected them to retire, right? Now, what can we say about older people in the workforce? They're usually much more senior. They have a lot more institutional knowledge. They know what's going on. They are more productive because they have been in their career for a long time, and usually they are the most productive people at doing what they're doing. And if you're replacing them with, fresh out of college, those are like the least productive, so you're replacing these very productive people with less productive people. So even if it's a one-to-one swap, productivity per capita will probably go down because of this, which is not a good thing for if you're talking about GDP, or you're talking about credit markets, or you're talking about all that stuff. That's one of these hidden things in demographics, that as people retire, they're replaced by less productive people. And that's really bad in places like Russia. Now, I predicted that Russia is going to win this Ukraine thing, but over a longer period of time, say 20, 30 years, I think Russia is going to have a really hard time because they have a much older population. Most of their engineers are very senior. They don't have a lot of younger people that are being engineers. All their engineers are from the Soviet era. And so when those people retire or die, then they're not going to have a workforce to replace them. So things like that are really important when you talk about demographics. But
well, especially when you mention the millennial generation, there is a country next to America that has a millennial generation, and you can start to see the future of trade when you talk about deglobalization.
Yes.
Agreed, because America has everything it needed in a healthy young population in Central America and Mexico. Yep. I continue to predict that everything that was in China is just going to move, and it will simultaneously fix America's immigration issues, right? It'll just become a lot more integrated continent-wide, because all the companies will be running work visas for their people at this place and that place. But if everything does come back to the continent, at least, I think you're going to see almost an expansion of the idea of the United States. And I'm not saying Mexico becomes a United State or anything, but with what's going on in El Salvador, with Texas, and even the American situation, what I predict what we're going to see with, Trump brought this in, the actual role of the president changing, where you can actually just treat it like a TV show and it doesn't matter, because we can replace him with an 80-year-old guy who doesn't really, totally work either. Yeah. I'm for Fetterman. I'm a Fetterman 2024 guy, because I want it lower still. I want less IQ. But the point is, you're going to see states, for so long in America, we thought that the states were just the minor leagues. That was sort of a World War II mindset, right? And even a Federal Reserve mindset, if you will, right? Like, yeah, the banking stuff is, not even federal or a reserve, but somehow the connotation that this was a federal competency, and it never was a federal competency. The buggers, that was a states' right issue. Banking is states' right. People don't understand all the time that the states are actual partners. It's a division of powers, and they're supreme and sovereign in their own powers. And we forgot that after World War II. We kind of just left the aircraft carriers going, and we just kept the whole World War II machine running. And it's just like, okay, here it is. What we're seeing by changing the job of president, by changing the orientation of all these things, the states are going to express themselves more. And I think there is going to be a type of coordination around Bitcoin states of America. There's no constitution. It's just states that are smart enough to do what Texas announced this week, the advice they announced this week, that there's going to be tax incentives for adding capacity to the grid because of Bitcoin mining, right? So if you add capacity to the grid because of Bitcoin mining, tax incentive, right? So basically they can run the engine even hotter, right? They can run the whole electrical capacity of Texas even hotter now, which can only be a good thing, right? So you're going to start to see, and simultaneous, you had New York, we're in a virtue signal. You can only mine with renewables, right? So they can just, freeze. So you're going to see this. You're going to continue to see this change, right? And you're going to see places that identify because they actually have sane finances. They have properly motivated, oriented institutions in their country that know how to build electricity grids and know how to make sure there's no brownouts. We get the brownouts here in the Northeast, man. We're all excited. It's going to be winter. We're going to get a brownout. We're selling all our energy to Europe, because we got to backstop the whole issue over there. And we got to give them all of our natural gas. And we were too good for coal plants here in the Northeast, so we didn't need those either. It's great. It's great. Luckily, I live next to Quebec, which is the same thing as Texas. It's just the same thing. It's just Catholic versus Protestant, but it's the same energy rich. Doesn't matter what they do. As Tesla said, the greatest form of energy is waterfalls, and Quebec built the most amazing hydro infrastructure the world knows. So we got all the energy we need.
Awesome. Yeah. Man, you said so much there, and we could probably do a whole show on just the future of North America, because I am also a huge bull on North America, not just the United States, but Mexico and Canada, everybody together, big bull on North America. But let's finish up this Powell stuff. This is the last little clip of him summarizing this, and I want you to pick out that he said what he says about going forward, that he says it perhaps is appropriate to moderate, or what does he say? Yeah, to moderate rate hikes. So let's play this next clip, please, Chris.
So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer-run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2% over time. Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy at a restrictive level. It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done.
All right, so there you have it. He said that it might be appropriate to moderate rate hikes as soon as the December meeting, and that is what sent the stock market higher and a bunch of the dollar lower, Bitcoin a little bit higher. Pretty much everybody reacted in a very expected fashion when he said that. So it looks like a Fed pivot might be coming. Nolan, any reaction to that last bit?
Yeah, it's as advertised. They're doing their signals. They can, and as I understand, there's going to be a process now that they usually follow up these public hearings, right? There's always the hearing, and then next week they can actually send new trial balloons up to see if there's been, let's say, if people have reacted the right way and in the way they anticipated and wanted to provoke, because that's what they're doing, right? They're trying to persuade, they're trying to nudge. They wanted that bump of whatever we saw across the stock exchanges and markets, right? They're trying to induce that because there's worry that they've overcorrected, right? That there's worry there's overcorrected. So they're trying to find that space now where they can have that plausible deniability if they have gone too far. And a lot of people say they have, right? Michael Burry has come out and said they've gone way too far. We're on a cliff, but of course he says that every week. But there are people out there saying that this was too much, this was too far, and you hear him being a typical salesperson, typical marketing work. This is a marketing job. The whole system is a marketing job, and so he's a good marketer, right? You know.
Yeah, I think he is, and he ended it there with saying, you know, we're going to do whatever it takes, or we'll go until the job is done. So definitely marketing. All right, so that's all my stuff on the Federal Reserve and Jerome Powell.
Did you hear that Daily Wire has optioned the Atlas Shrugged? So the news site has optioned to make the movie Atlas Shrugged, the Ayn Rand.
Really?
Yeah. Did you know that Greenspan was her student?
No. I knew he was involved, yeah. He was a big gold bug early on.
Have you ever read his children's book?
No.
Clouds and Rainbows, I think. Rainbows and Clouds. Check it out. The Boston Fed published a kid's book, by the way. It's amazing. It's actually for Bitcoiners, by the way. Oh. It's you get a sense of, let's say, a civil war, like one of these like Harry Potter Muggle things inside of the Fed Reserve when you read it, right? You get this idea that like we don't really know on the outside, but it's pretty remarkable. It's about a girl who lives underground. It's a civilization that lives underground, but it's all black and white. And she sees color, the sun gold come through, and picks a flower, and it brings color to the area. But then they want to divide the color, the flower, and they don't know how. It's because then the flower dies. But then she finds a place to plant it and grow new flowers. But they've got to administer them in a way that makes people happy. But it nevertheless brings color to their area and livens everything up. It's pretty neat stuff, man. And Greenspan was heavily involved in it. Yeah.
Yeah, I know he was a big gold bug. All right, let's skip the charts for now.
Wishes and Rainbows. Yeah. Wishes and Rainbows. Pardon me.
Wishes and Rainbows.
Yeah.
All right, I'll definitely check that out.
Yeah.
All right, let's go into the Turkey situation. So I do have one slide, I believe, on this, or two slides. So Chris, if I could get slide number 14, please. I'm just going to read this article to get all the audience up to speed on what's going on in Turkey. So, of course, Turkey is just across the Black Sea from Ukraine, and Turkey has been pivotal in some of the quote-unquote peace talks that have gone on between Russia and Ukraine. But in this article, the headline is, Turkey is about to invade Syria, and the U.S. won't do much to stop it. 2 weeks ago, a massive explosion rocked a busy road in Istanbul, killing 6 people and wounding more than 80. Within hours, Turkish authorities blamed the deadly attack on the YPG, a Syrian Kurdish group that has worked closely with the United States in the fight against ISIS. Turkey's response has been emphatic. After accusing Washington of being complicit in the attack, Ankara has carried out a series of air raids against Kurdish military targets in Iraq and northern Syria, some of which are also occupied by American soldiers. And I think they have about 1,000, a little bit less than 1,000 American soldiers over there. It looks like those airstrikes are just the beginning. Turkish leaders are now suggesting that a ground invasion is imminent, a move that would expand hostilities in northeastern Syria to a level not seen since the U.S., YPG, and their allies beat back the majority of ISIS forces in the region. The reports indicate that Washington has recently brought a number of soldiers across the border from Iraq into Syria, meaning the U.S. troops could be caught in the crossfire. For American policymakers, this situation poses some serious problems. Washington's support of the YPG has long been a thorn in the side of Ankara, which claims that the militia is affiliated with the Kurdistan Workers' Party, the PKK. And the PKK is a Marxist-Leninist group over there in Kurdistan. So they're saying that these Marxist-Leninists have bombed Istanbul, and they're going to go take them out. So let's continue here. While the two NATO allies, that would be Turkey and the U.S., consider the PKK as a terrorist organization, the U.S. maintains that the YPG is a separate group with its own interests. This difference in views is at least partly a practical move by the U.S., which has leaned heavily on the YPG-led Syrian Democratic Forces to push back ISIS. As National Security Council spokesman John Kirby recently lamented, a Turkish offensive would, quote, limit and constrain, end quote, the SDF's anti-Islamic State operations, quote, and we want to be able to keep pressure on ISIS, end quote, Kirby said. Quote, the United States did not approve Turkey's recent strikes in Syria, said State Department spokesman in a statement to Responsible Statecraft. That's the website here. Adding that the U.S., quote, urges all parties to immediately de-escalate the fighting. We continue to oppose any military action that destabilizes the situation in Syria, end quote. Despite these strong words, the war in Ukraine has forced Washington to recalibrate its priorities, as Giorgio Cafiero of Gulf State Analytics told Responsible Statecraft. Quote, the Biden administration sees Turkey as a very important ally vis-a-vis the conflict in Ukraine, noting Ankara's key role in provisioning weapons to Kiev and moderating talks between the warring parties. Quote, the White House is not interested in aggravating Turkey right now. So Washington will likely avoid using its significant leverage over Ankara, including a pending deal that would enable Turkey to buy a fleet of 50 new F-16s to try to prevent an offensive in Syria. Instead, the U.S. leaders will continue to call on both Kurdish and Turkish fighters to de-escalate. In some ways, this marks an acceptance of a fait accompli. Turkish officials are the only ones who have concluded that the YPG is behind the Istanbul attack. So the U.S. says they can't confirm it. But to a certain extent, that doesn't matter. Turkey has long viewed the Kurdish militant presence in Syria as a top national security threat, and leaders in Ankara had already been floating the idea of a new ground offensive in the months before the bombing. On top of all that, Turkish President Erdogan faces a difficult election next June, and failing to respond decisively to an attack in Turkey would be a significant liability for the already embattled president. As Turkey expert Sibel Otay recently argued, quote, electoral defeat is a very likely outcome for Erdogan, end quote. Quote, Turkey doesn't take orders from others. We are a key actor in the region and makers of our own foreign policy. Is a powerful and compelling message that attracts voters from every corner of the Turkish society, Otay wrote. The situation in northeast Syria is also vital to another hot-button electoral issue, Syrian refugees. As Turkey's economic crisis continues to worsen, many voters have grown resentful towards the several million displaced Syrians that Ankara has welcomed since 2011. While the situation in much of Syria remains too dangerous for refugees to return, Erdogan has suggested the creation of a safe corridor in the country's northeast where they could be repatriated. For Ankara, this means getting rid of the YPG presence in the region, which would give Turkish officials the added benefit of creating a buffer zone between Turkey and its Kurdish forces. Almost done here. Meanwhile, Russia has also reportedly tried to dissuade Turkey from a full-scale offensive in Syria. After initially calling for a limited incursion, Moscow is now asking the YPG to hand over control of a buffer zone to the government in Damascus, which is led by Russia ally Bashar al-Assad. News reports indicate the YPG cadres are divided on whether to take the deal, with some still holding out hope the United States will find a way to prevent a Turkish attack. And the YPG isn't alone in considering a shift in its policy towards Damascus. In a press conference last week, Erdogan said he would be open to meeting with Assad, despite the fact that Turkey has helped lead the fight against the Syrian regime since 2011. So, looks like things are heating up over there in Turkey, in Syria. And one thing I want to put this in context. So for a long time, I've been talking about how the rimland, or the kind of the rim of fire there in Europe and Asia, is going to heat up as the U.S. presence and U.S. role as world policeman winds down. And I have a chart also. If you can go to the last chart there, Chris, number 15, please. That is, it's an image. This is from classic geopolitics. Back in the day, Mackinder, he has the Heartland theory. That's the world island, basically Eurasia, with the heartland and the rimland. So who controls the heartland controls the rimland, and who controls the rimland controls the world. That's what Mackinder said. So my theory is that the rimland is going to explode. The rimland is going to have lots of fighting. And the people that think that when the U.S. pulls back, that the world is going to be free and prosperous and all this, I don't think so. I think the minute the U.S. loses influence, we're going to see more and more things like Ukraine, now like Turkey, like Iran happening, like Pakistan, and like China, all in that rimland area is really catching fire. So I expect these type of things to escalate and spread out over this entire area. Now, what does that do for credit markets? That's kind of what my piece that I'm releasing on Bitcoin Magazine here in the next couple of days, what that will cover for credit markets, and why Bitcoin, in a world that's more fragmented, why we need a currency that is neutral. You don't want to have US dollars held in a bank that is, you're trusting somebody to make sure that you have access to those dollars. So Bitcoin is a neutral currency that can trade in a fragmented world. All right, Nolan, that was my monologue. What comments do you have about the situation in Turkey?
Well, so we'll do Turkey first, and then I'll add on the Heartland and Rimland piece. So the Turkey one first. So, pardon me. My prediction there is simple. We've seen what Turkey is doing with the drones, right? They noticed how this whole conflict was managed at the start in 2011. Remember, Obama unleashed the whole drone program, and the drones at the time were very sophisticated, usually one strike devices. What we've seen coming out of Ukraine and Russia has completely altered all logic of violence and warfare and how things work because of the types of drones they're using. Right now they've got Navy drones that spit out bombs. Even when you look at the sophistication of the Javelin system the Americans supplied the Ukrainians with, if it's not exactly a drone, but two people can operate it. You get one sort of an iPad targeting system, and then one person holds the launcher, but you can be miles and miles and miles away. And while not a drone, I mean, it's a camera and a gun that flies. So it's pretty close, right? So, even tanks, right? Tanks finished. I predicted the minute the Russian-Ukrainian war started that we would see that our military armaments from World War II that we're still using are totally useless. And tanks look the most vulnerable, right? Tanks, you can just drop something on top, and if you know how some of the bombs are working, it sort of penetrates the armor and then explodes on the inside of the tank. Really devious stuff. Now, Turkey has a long history with these drones because this was all on their border. This Kurdistan thing has been going on for a long time. When Americans originally went into Iraq, they gave the presidency of the country to the Kurds in order to help keep the peace, basically, between the Shia and the Sunnis. But that created a ton of resentment, and that's why ISIS went there first and grabbed the Yazidis and grabbed all those people, because they were getting sort of favored by America in the early part of the war, and then there was a price to pay for that. So the particular types of munitions, the drones, have been used in that particular area on Turkey's border now for over 10 years. And Turkey cloned them and copied them. And we've seen Turkey wash its hands a few times already, because Turkey definitely does play both sides, right? NATO member, but we don't know. And they play footsie with these guys and footsie with those guys. So I continue to expect Turkey to project influence in that area. Yeah, I continue to expect Turkey to go like almost Ottoman on what's going on in the area, because it does have, I would say it's the drones that give them the capacity. The drones separate them from their neighbors. Iran has the same situation, but I think they're going to get everything they want by just sending drones in, and they'll get the death toll they need for Adrojan's re-election. right? They're going to get the death toll they need. But guess what you get to do with drones? It wasn't me. I didn't know. No, you don't get to catch a guy who speaks a language anymore. You know, in the old days in World War II, it was easy. Pick a guy who speaks German. We're good. He's a spy. We got him. You know, can't do that anymore. It's video games, right? The guy could be in America. It's all video games. So the size, the cost, all of that stuff, the effectiveness. So I continue to think that Turkey, it will be a fog of war. We're not going to get any clear guilty or anything like that because they are NATO members and they do have responsibilities. So they're going to continue with the drone proxy war that America seems all too happy to participate in. They're having a great time. Billions and 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 billions that are heading over there. So
yeah, I agree that Turkey's influence will probably grow in the region. They straddle Europe and Asia, right? So they, like you say, they kind of have 1 foot over here, 1 foot over there, which they literally do. They literally have 1 foot in Europe and 1 foot in Asia. So they will live up to their history. They'll live up to their geography. And I think they will project power in that region. Greece better watch out because Greece is on the other side of this.
Well, at the same time, I do, you know, in the history of Turkey, Ataturk. Remember Ataturk?
Yep.
And Ataturk was the first, you know, he was a great guy. He was one of the young Turks. We had a part of his life that was no good. But he was the person who said, until females have the same education as males, we will not make it. He refused to wear any traditional clothing and forced Turkey to be a secular country. So I still think Turkey is going to project power. I just think that the androgens of the world, their time is limited. And I do think not that Turkey is going to become a Western democracy. That's not what I'm saying. They're not going to turn into France. It's not France. But I think you are going to see Turkey fit in the world in a really great way. I believe that. I could be wrong, but I hope anyway that it goes that way because they're on the front line here. They've got the inflation first, and I guess I'll bring it to what you said next. The whole and I guess this fits into dollar milkshake theory. You know, the whole world of Ray Dalio. The dollar is going to be weak, like you said. No. The dollar is going to be strong. Everyone needs dollars. There's a liquidity crunch. They need the dollars. But now we're starting to see the tension of different monetary policies infringing, as I mentioned, Korea saying it's not fair, that the U.S. policies are more attractive. So here's what happens. If we keep the petrodollar, as in the only market in the world that oil can be made in is dollars, which is already broken, like that no matter what is broken. We can all admit that what happened in Russia and Ukraine smashed the monopoly of the US dollar as the only instrument by which you can buy oil. Everyone has agreed you can buy it with Russian rubles, but what's happening in the Russian ruble is it sucks. So then now the Russian ruble has had to replace all of its reserves with yuan, Chinese yuan, which also sucks. And go to Brazil, you know, this whole BRICS thing, like what's going on in BRICS right now? BRICS, we've got an election of a month where we don't have results. The military looks like it's going to support the old guy who some people say won. You've got Russia in war. You've got China. We don't know, right? So they're not creating a
fire.
They're not creating a currency to compete with the dollar, but they still can't accept. Right. The US dollar as the primary trade vehicle. So my theory continues to be the following, that as long as we Bitcoiners make American energy companies richer, if we make them richer, we continue to create an actual obvious transparent market between energy and Bitcoin that way. And by making them richer, it starts with just helping them out a bit with the methane, but it moves quickly to financing the entire operation, small modular nuclear reactors, the whole energy sphere, right? If we take over US energy, I mean, they call the shots in the world as it is today. I mean, whatever happened in Nord Stream, guess who made Nord Stream happen? It could have been some politicians, but it wasn't. Someone backstopped it. It was American energy companies. They said to Europe, we can do this, don't worry. Don't be victim to Russia. We're going to take market share, right? We'll supply it, right? So this whole thing in Russia and Ukraine still looks to me like America looking for market growth in energy, and it didn't work out the way they thought it would. So they got a new market, but they might have lost their monopoly, and the symbiotic relationship of oil and the dollar and the petrodollar as the measuring stick for global economic, anything, just the measurement for global economics, will be threatened because the dollar just isn't palatable for some. I think in the end, if we do it on our side and it means something to Americans that there is a cost of energy tied to Bitcoin, BRICS will adopt it immediately. And it will be a separate reference point and a real counterbalance to the petrodollar. So we love the Ring of Fire. We love the heart. We love these places. We love them,
All right. Well, that's a good point. That's a good point to end the show on here. So, because we're running up against time, Nolan, do you have any plugs you want to make? I mean, this is your show, but do you have anything else to add here at the end?
Well, we always like to remind people that Bitcoin winter will be over officially May 18th in Miami. You can count on it. It will be hot.
I'll be there.
Bitcoin winter. It'll be great, right? So Bitcoin Magazine, Bitcoin 2023, May 18th to 20th. Get your ticket. It's going to be a hell of a time. You'll see Ansel. We'll have fun. We're going to do something we're going to do Fedwatch live on the desk, and everyone's going to love it. It's going to be so much fun.
All right. Well, guys, thanks for joining. Like, subscribe. Thank you very much. Share in the bear market and check out bitcoinandmarkets.com. All right, Chris, take her away.